Hey everyone, Marvell Technology is one of the latest companies benefiting from the rising effectiveness of artificial intelligence. So in this video, I'm going to dig deeper into the company and try and understand what's going on with Marvell Technology stock. So let's jump right in. Let's take a look at the details of this innovative AI company. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, Marvell CEO Matthew Murphy saying that for the third quarter of its fiscal year 2024, its revenue of 1.42 billion increased by 6% from the previous quarter, above the midpoints of their guidance, so better than they had expected. A note I will make here is you notice that the company is highlighting that they grew revenue from the previous quarter, but they're not talking about what happened from the previous year. That's because the revenue decreased year over year. And it's annoying when I see companies do this when their revenue is not growing year over year. They may sometimes fail to mention that at as many times as they can. They'll avoid mentioning it while they highlight the things that they want to highlight to analysts and investors. But for you, I'm pointing it out. Their revenue decreased year over year. You don't see it here in this statement. So in their data center end market, revenue for the third quarter was 556 million, well above their guidance, driven by stronger than forecasted AI revenue. Stronger than forecasted AI revenue. And this might be like the seventh time you're going to hear me say this? At least the seventh time, where companies that work with AI in the AI market, they continue to upgrade their guidance, right? They keep telling investors they think this is what their revenue is going to be from AI, and it actually turns out to be like this. And they continue to have to upgrade their guidance for AI. This is yet another example. I think we're up to 7 now of companies that I'm following in the AI market that continue telling investors, look, we thought we had a grip on how strong demand from AI was. Turns out we were underestimating demand was stronger than expected. And here's another example here with Marvell. So as expected, revenue from the enterprise on-premise portion of our data center end market declined sequentially in the third quarter, reflecting weakening demand. Demand for data storage also remains depressed, and industry expectations for recovery have continued to push out. And that's been true across the board. Yesterday, Snowflake reported quarterly earnings results that disappointed investors, Snowflake being one of the premier data analysis, data storage companies, and management there have been telling investors that this market remains pressured. Companies are taking steps to reduce their storage of data expense. And that's despite the fact that data is the foundation for what artificial intelligence is based on. So I think companies are finding a way to use less data, but use that data in a more effective way. One of the things I've been seeing in the data market is companies used to store up to 7 years of their data. Now they're saying we're only going to store 5 years of our data. So they're just deleting or removing those 2 years because they're finding it obsolete. It's from too long ago. We don't find it helpful in our operations. It's costing us more to manage that data than it is in helping our business. So we're just going to remove it. We're going to delete it. It's no longer providing a value to the business. And we're seeing that a lot across the board. I'm seeing that a lot in the data market. So the company earlier on this day that the report was announced, November 30th, released a video highlighting their long-standing collaboration with NVIDIA. We're using Marvell's optical interconnect technology to enable the bandwidth, scale, and reliability required by generative AI. This is where Marvell technology is benefiting from the rising effectiveness of AI and the rising demand to implement NVIDIA's leading-edge GPU chips for generative AI. Marvell is in an excellent position to benefit from that trend. And across the call here, you're going to notice that from Marvell management that the AI segment of the business is doing really, really well. And then some of its other segments, not so much, right? So it's benefiting from that trend, but the rest of the business is kind of not doing so well. And I think it's a broader look into where corporations are looking to allocate spending, right? You're not seeing corporations, businesses, enterprises, institutions increase overall spending. In fact, you're seeing several of these larger corporations announcing billions of dollars of cost cuts. But still, even though they're cutting billions of dollars in costs across their business, they're investing in artificial intelligence. They're increasing their spending in artificial intelligence. So it seems like they're getting that money by reducing spending in other categories and then allocating that spending to AI. So that's where the enterprise-wide market seems to be heading right now, is finding areas to cut costs so that you can use that money to implement artificial intelligence. And we're going to see more of that here with Marvell. So they're seeing strong customer traction for their next gen 1.6T PAM platform that they started sampling this past April. So they've begun some customer sampling and they're looking forward to ramping that out. That can be an interesting prospect for the company in fiscal year 2025, but calendar year 2024. In fact, Marvell's prospects for the next 2 years in terms of revenue growth are excellent. Revenue and profit growth are excellent, even though its most recent year that's about to be completed has not been great. It's been declining. As I mentioned, revenue decreased year over year. That's expected to turn around for Marvell. Let me share that with you here. So over the next 2 fiscal years, Marvell's revenue is expected to increase to 11% and then 19.9% revenue growth, while earnings per share is expected to increase by 30%, 33%, and then 40%. So the next 2 years are looking strong, even though the current year is not looking so well, with the revenue decreasing 7% and earnings per share decreasing as well. So better prospects ahead for Marvell, even though the current fiscal year that's about to be over, when the company reports its fourth quarter fiscal year 2024 results, and in a week or two after you see this video, then the company is expected to start to improve its prospects. So the CEO saying that in the fourth quarter of fiscal 2024, they expect revenue from the data center end market to grow in the mid 30% range on a sequential basis. So 30% growth from the previous quarter in this segment. In the last earnings call, they provided a forecast for AI revenue to cross 200 million run rate exiting the year. Since then, demand has continued to grow, and we now expect our AI revenue in the fourth quarter to come in significantly above our forecast. Yet more signs that the AI market continues to be better than expected. And how many more times am I going to say this? Hopefully a lot longer, because I've recommended a lot of these AI stocks as buys in my videos. And in fact, 2 of my top 24 stocks to buy include NVIDIA and AMD. So I'm counting on a continued growth in the AI market for investors following my channel and investors looking at my stock picks. So continued growth in the AI segment, great news. Hopefully this trend continues for all the companies operating in the AI market. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.